So I get this question a lot, if whether or not it's a good idea to use personal term loans to pay off credit cards, high balances on credit cards, and how that's going to impact your personal credit. And the answer is really, what is your objective? What are you trying to accomplish? If your goal is that you're trying to increase your credit scores and you're trying to get maybe qualify for another loan or some other, even another credit card or funding, then that might be a good idea. But if your objective is to pay off debt, then that might not be a good idea. It's really a question of, what is your objective? What are you trying to accomplish? So at the end of the day, what happens is credit cards with high balances are going to dramatically lower your credit scores. So you can have loans, car loans, student loans, personal term loans, even your mortgage, all of these loans, as long as they're being paid on time, they're not going to have a dramatic effect on your credit score. As a matter of fact, the longer you have those loans and you're paying them on time, they have a positive effect on your credit. But as soon as one of your credit cards, and I'm just talking about one credit card. So imagine if you have 10 credit cards and one card goes over 30% utilization, just one card, your credit scores are going to start to go down. And then it goes over 35, it goes over 40, 45. Now your credit scores are going to take a major hit. Once you're over 50%, your credit scores are going to tank. And if you have multiple credit cards with high balances, then your scores are going to drop dramatically. Now, that's not a negative thing. It's not derogatory. It's not a late payment. It's not collections. It's not something that requires credit repair. It's just a matter of the credit utilization going up and down based on your current real-time balances, right? So if you have a goal or a date in mind when you need to have your credit in its optimal position to qualify for funding, then you just need to plan ahead and get those balances paid down to under 30% and then give it at least 30 days, sometimes faster. Typically what happens is the credit cards will update 2 to 3 days after the statement closing date or the due date of the card. So depending on when you pay it in the month, you may have to wait 30 days for that balance to update. Now you can expedite that by communicating with the credit bureaus to try to get the balances to update sooner. And so the question again was, if I take a personal term loan out and pay off those credit cards with the high balances, is that going to increase my personal credit score? And the answer is yes. Now you are going to get an inquiry for the personal term loan. You are going to show a new account reflecting on your credit report. So there's going to be a slight dip in your credit for the inquiry, about 3 to 5 points, plus the new account, you can expect another 5 points. But if you have, let's say, 3 or 4 cards with high balances over 35, upwards into the 40, 50% or even higher utilization, that one term loan, let's say you got a 10 or 15 or $20,000 term loan to pay down the credit card balances to under 30%. As soon as that updates, there's a good chance your credit scores could jump up 20, 30, 40, 50 points, which is a very, powerful thing when you're looking to position your personal credit to get the best rates and the best terms. If you're trying to apply for a car loan, if you're trying to apply for a mortgage, if you're trying to apply for 0% interest promotion credit cards to fund your business, or if you're trying to apply for an SBA 7A loan to fund your business, this is a very good strategy. A good maneuver is to offset the high balances with a personal term loan. But again, you have to look at your situation, your case, and when are you looking to apply, because that is going to put a new inquiry. It is going to be new debt. And so that is something to also consider, right? Alternatively, if you're not really looking to really affect your credit scores, you might be able to qualify for a 0% interest promotion credit card, which then would give you maybe 12 months to 24 months at 0%, where you can balance transfer some of those credit cards over to the 0% card. But now that one card might be maxed out, which is going to keep the scores low. But the advantage there is that you'll be paying it off at 0%. So again, what is your goal? What are your objectives? If it's really just to pay off your debt as fast as you can, at a low interest rate, then the 0% strategy might be the best option. If it is to increase your credit scores to qualify for something bigger and better, then a personal term loan might also be a good option. So these are things that you have to weigh and consider. And if you have questions, want any advice or consulting on your personal or business credit or business funding, make sure you schedule a call. I'm happy to give you a free 15-minute consultation, discuss your situation, and offer you my services. So without further ado, thank you guys for watching. If this video was of value, please make sure you subscribe, you like, and you share. Let YouTube know that you like my videos so that it increases the amount of times they recommend and promote the video to help other people out. Thanks again. Take great care. God bless.